got to get going on taper sounds a little different than talking about tapering. How do you read these comments from this morning, and any major expectations or things to look for, throughout the remainder of the week with regard to the virtual Jackson Hole Symposium?
Well, I think you're seeing one wing of the committee that clearly wants to get going on tapering very quickly. But I think if you look at the last Fed minutes, you see a lot of diversity of opinion. And I think the center point of the committee is really to be somewhat patient here, to get going late in the year, but to not really start that process immediately, and also not to be signaling it, I think, at this weekend's Jackson Hole get-together.
Mike, the market seemed to be reflecting kind of this polarization as well. Do you believe that any type of activity or commentary tomorrow, especially from Jay Powell, would be market moving? Is there any type of surprise that the markets may not be anticipating right now in terms of the way things are priced in?
I think if he was unexpectedly hawkish and was seeming to be in a hurry along with this faction of the committee, yes, I think that's probably the only thing they could do, because since they actually made the conference virtual, and since obviously we've been dealing with a little bit of the deferral of return to work in offices and things like that for the Delta surge, I think we baked in this idea that bought ourselves some time. Maybe they at the September meeting say, OK, now we're really going to get going. Since the last Fed minutes, I think the street has basically said, fine, November, they're going to start the taper. And that's probably baked in at this point. I'm not in the camp that says the actual reduction in monthly purchases that represents is material to what the markets do. It's about the psychology of how that starts the clock on an eventual tightening move, and where we are in the cycle, definitely mid-cycle at that point.
And Bruce, you see rate hikes starting sometime in 2023, a few years off at this point in time. You also have a forecast for global GDP to grow nearly 3%, but you say that the risks have been increasing, that they're now skewed to the downside. Kind of how are you factoring that into your calculus, especially as it pertains to what we're seeing with regard to the Delta variant, what we're seeing with regard to geopolitical risks, and then, of course, against this backdrop of kind of macro policy that we're focused on this week?
So I guess I'd make 3 points. On growth, there seems to be still a lot of momentum in terms of reopening, getting growth going, stimulus on the policy side. But what we've seen more recently is a hit to sentiment. What we've seen is supply constraints continuing to be quite significant here. So we actually have global growth and U.S. growth both running in the 5 to 6% range in the second half of this year. I think risks are a little skewed to the downside, although that's still a very strong profile. I think on the inflation side, we agree that inflation is elevated now. It's not going away. The supply pressures are going to stay in place alongside strong growth. It is going to come down next year, but I don't think it's going to come back down to where the Fed actually is forecasting it to. And we do think there will be pressure on the Fed. But the other point here is until the labor market is fully healed, and I think given the Fed's current desire to have an inflation overshoot on a sustained basis, they're going to be slow. So I'd say the window for Fed hikes really starts to open late 2022. I think we're going to get it sometime in early 23. There's a lot that'll happen, but I don't think we'll get Fed hikes over the next 12 months.
Shepard Smith here. Thanks for watching CNBC on YouTube.